Hi, this is Professor J, and welcome to the second video in the accounting series. This one's called Debits, Credits, and T-accounts. And mostly what this one is information that will help you when we get to transaction analysis, which is the next video. So there's a few things that you need to know, just sort of get everybody on the same sheet of music. First of all, there are abbreviations for debit and credit. Rather than write out the word debit, you can simply write DR. Yes, that's a strange abbreviation for debit, which doesn't have an R in it anywhere, and I'm sure you can look up on the internet the history of why it's called that. I don't remember exactly why. I used to know at one time. But DR is the abbreviation for debit. And CR, much more logically, is the abbreviation for credit. So that's something to know. That will come in handy when you are doing journal entries where you say debit this, credit that. For example, you could write debit cash $100,000 and credit common stock for $100,000. That would be a journal entry. If you had just simply issued $100,000 worth of common stock, you would now have cash because you issue the stock, people give you money for it. So you would debit cash, credit common stock. Now right now, admittedly, you don't know what to debit, what to credit, or exactly even what this all means, but just bear with me, we'll get there. So then the next thing to know is T-accounts. First of all, even if you've never done accounting, you've probably heard the term T-account. So, a T-account is called a T because it looks like a T. We put our account names on the bar of the T, and the left side is always a debit, and the right side of the T-account is always a credit. Now, I need you to forget right now, debit does not mean increase and it does not mean decrease. Credit does not mean increase or decrease. Neither of them mean that. It depends on what the account is as to whether a debit is an increase or decrease or a credit is. It could be either way. So, what you need to learn here is that debit just means left side of the T account, and credit means the right side of the T account. Now there's a simple way to remember that when you're having a brain cramp. Look at this little pattern. Look at the word debit, D-E-B-I-T, and then look at the word credit, C-R-E-D-I-T. Debit has fewer letters than the word credit does. Isn't that the same pattern when you see left and right? So the fewer letters get lumped together and the more letters get lumped together. If you were ever in the Navy, then you also know the words for left and right, port and starboard. So that means the left side of the ship and the right side of the ship. So they all go together. So left equals debit and right side equals credit. That's one way to remember. That's a very useful thing that will come into play when we do transaction analysis, which is our next video. See you in video.